Including the passage of the FinReg bill. Here we have Republican Senator from Missouri, the very distinguished Kit Bond, old friend of the show. Senator Bond, let me just go to the main one here. Let me start with FinReg, all right? Will this 2,300-page bill stop all future financial crises?
No way, Larry. It's good to be back with you, but the financial overreach bill that we just passed doesn't deal with the toxic twins of Fannie and Freddie. It doesn't prevent future bailouts. By applying the derivatives law to the computer game derivatives that were created on Wall Street, it causes a huge burden on smaller businesses, manufacturers. The Consumer Finance Protection Board could be a killer for community banks. And I think it's significant that a bill that was supposed to deal with Wall Street is supported by Goldman Sachs and Citigroup and strongly opposed by people on Main Street, from the community banks to small businesses to manufacturers.
Senator Bond, do you think Goldman Sachs should have had their butt kicked more by this SEC decision today? $550 million. Was that enough in your judgment? Will there be a Main Street revolt? Does it look like crony capitalism? I'm being quite serious, because Goldman, of course, will be heavily regulated along with everybody else under this financial regulation bill. Did they get their butt kicked enough in your judgment?
I think that a lot of people on Main Street may look at the fact that $550 million is a rounding error on a major investment bank. But I think the key thing is, as you indicated earlier, the SEC was asleep at the wheel during the creation of all these computer game derivatives, the collateralized debts, obligations, and all of the insurance. This stuff took the disaster that was created by pushing mortgages on families who couldn't afford them. That created a localized disaster, but they took it, they put it into derivatives, and they managed to crash the United States market and much of the world's market.
Well, but Senator, you know, it's interesting, this last point. The people that were not guilty of anything to do with the financial meltdown, like farmers, like industrial companies, like energy companies, like airline companies, who like to use the futures market, a.k.a. the derivatives, you know, to buy and sell whatever it is, their crops or their jet fuel costs, in order to do business without taking too many risks. Are they going to be hurt by this bill? These people were innocent bystanders, basically. Are they hurt by this bill, and why?
Exactly. Now they're going, as I understand it, they're going to have to post collateral. That's going to take away working capital from them, and they're going to have to pay to clear these futures contracts, the supply contracts, either on Wall Street or Chicago, the places where the problem existed. So the folks that run those are going to get more money out of Main Street, more hassle on Main Street. Some 533 new regulations are demanded by this bill. And that has got to be bad news for businesses of all size, and particularly the small business community that I listened to a lot last week in Missouri.
All right, Senator Kit Bond from Missouri, we appreciate your time very much, sir. Thank you. Coming up in the Kudlow Report.